Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas. And in this video, I will also be going over United States natural gas, ticker symbol UNG, as well as 2x leverage natural gas, ticker symbol BOIL. But first, I'm just going to go over the natural gas chart and go over some levels that do stand out to me. And also, I do want to point out that on Wednesday, I believe, I did put out a short pointing out that I did think natural gas could be putting in topping signals and that it might be pulling back to the 382 level here at around a price of $1.88. And in fact, that is what happened, but it actually went even lower, putting in a low on Friday, March 8th, crossing below the 50% retracement at a price of $1.83, hitting a low on the day of $1.81.7. And so I do think it is possible, quite possible, that natural gas does continue lower, but I also do think this could be the pullback that was needed before then continuing higher. And so there are a few reasons why I thought this could be a top. And one of those reasons is actually because I do follow Verified Investing and Gareth Soloway over on that channel. And he was talking about closing his position, waiting for a pullback. And so that got me thinking maybe it's a little risky to continue holding up here. Also, we did cross this green dashed line at a price of $2.03.7, getting a wick higher than that, but a close below. And so that made me think, well, maybe that is the target. Maybe I should be thinking about trimming my position. Also, on Monday, March 4th, we did get a wick up and a close down here. And the following day, we got an open above that close, a close higher, but we could not close above Monday's high, even though we did get a wick higher. And so that got me thinking, well, maybe this is kind of, suggestion that we don't have enough momentum to be eclipsing this high, getting a close above it, and that this, while it does look bullish, that we have a green candle, that it's moving higher, that does look like it could be a fake out signal. And then when on Wednesday, I did see this other wick up and it looked like there wasn't that much strength in it on the day, I started to think this could definitely be a fake out move higher with the green candle here, these wicks to the top. We might be seeing some downside. And then I asked myself, well, what's the difference between these wicks up and these wicks here? So here we did get some downward consolidation, kind of, pulling the spring back to let it go. And also we didn't see closes moving higher above into this wick, but not closing above the wick. And so that made me think, well, it looks red. It's pulling back. That might be shaking some people out, not wanting to lose the gains that they had collected. And so maybe that was, a fake out signal to the downside before moving up, before gapping up between Friday of last week and Monday, March 4th. And also, because we did hit this level, the $2.03.7, hitting a high on Tuesday of $2.05.6. So I did feel like it was a little risky. And so I decided to take most of my position off the table to then reestablish at a lower level. But to note, I am trading UNG, not natural gas here. But one thing that I do find really interesting about the charts is I had seen somebody on Twitter posting about how there was a retracement to the 618, and I didn't see it. So I was kind of, wondering, well, how could I adjust my analysis to get a better idea of that pullback and get a better understanding if this pullback is over? With this doji that we saw on Friday, a nice little cross there, I do think that could suggest that we are putting in a bottom here. We did get a close above Thursday's close, and we did get a wick below, suggesting, there were a lot of buyers stepping in here to move the price up. So I do think it is quite possible we could be testing some moves to the upside, but I do just want to get a better handle of why did we stop here at the 50% level when I had been thinking that the 382 might be a nice little pullback before continuing higher. Or, is this a more full retrace? And one thing that was pointed out on Twitter was based on this low, the retracement here that would be at a price of $1.67.8. So I am just going to adjust that in this Fibonacci here to $1.67.8. And so now that is aligned with the low of that day. And if we do look at the retracement now, and so I should note too that we did have this run up here and then a pullback. And so that is the bottom before moving up to this next high. And so with that at the base of the retracement, we can see that in fact we did pull back from the high to the 618 at a price of $1.82.24. And the low on Friday was $1.81.7. So that does suggest to me that the bottom could be in before continuation higher, but I do want to caution that it could always move lower. The next level down being the 786, and that is at a price of $1.75.89. And then a full retracement to this level would be right around, $1.67.8, the low of this candle day. So, I do think that those are all important levels to be paying attention to, but I also do want to point out what could be potential upside. And so what I see here, if this does start to rally, I do think we could be revisiting the lows that were hit here on December 13th, and that would be at a price of $2.20.9. So I do think, there's plenty of upside still. And here, if I do take a measurement from right around the current price up to there, that represents about an 18% swing. So, I do think that is pretty nice. And, like I said, I did reestablish most of my position, but I did that with UNG. So I'm going to switch over to that chart now. And so here, looking at UNG, I do have that same full retracement. But interestingly, I was expecting the charts to pull back to the 382. This actually went down further than natural gas, which on Thursday, natural gas came down to below the 382, but did not cross the 50% level. Whereas on Thursday with UNG, it did, closing at a price of $16.03 on Thursday, March 7th, hitting a low of $16 a share. And so that did cross the 50% retracement, but did not get to the 618. And I do want to note also that UNG closed the week on Friday, March 8th at a price of $16.13. Also putting in that nice little cross pattern there at the bottom of this big red candle that could suggest that we are going to be seeing a reversal in the next week. So I am looking forward to that. But if I do adjust this Fibonacci retracement to go from the low that was hit on February 23rd, just like I did with natural gas, that low was $15.11. All right, and so now with that adjusted to the low from February 23rd, we can see that UNG actually dipped below the 618 and is currently trading below it right now, with that level being at a price of $16.20. So I do think it would be great for us to reclaim 1620, but really if we could get back to the 50% retracement at 1654, that would be putting in, ideally, closes above that, above this wick high from March 8th. And so that would be at a price of $16.43. So really, we do want to be seeing our closes reclaiming that level, ideally getting above 1654. But, as I had mentioned, it could always go lower. And so the next level down would be the 786 at a price of 1572, or it could get a full retracement to this low at a price of $15.11. But then, I'm just going to take a step back like I did with natural gas so we could see where that previous low was. And so looking at that, that was hit, again on December 13th here for UNG. And that price is like exactly at $18. So, from $16.13, let's see what kind of percentage change we could see here if we do go up to $18. And so let's see, $18, I'm getting a little excited. Oh, $18 is actually just surprisingly where we just were. So that's about an 11.5% move. And I'm just going to check that to make sure. Yeah, so we already did move up as high as, I had hoped. And so really, I guess with UNG, hopefully we can eclipse $18 and perhaps move higher, like to 20. And so that, I guess, I'm adjusting that. That would be my hope for UNG, as it did go higher than natural gas relative to that previous low. So I could definitely see natural gas going higher as well as UNG, and it does make sense that there was more of a pullback for UNG relative to natural gas, because relative to its previous low, it did go higher than natural gas. So that actually does make a lot of sense. But with it starting to, hopefully find a bottom now, I hope that we can move past $18, maybe find that as support before continuing to $20 a share. And so I suppose I should do a measurement from current price right around there up to 20. And so that would be about a 23-24% gain. So I do think that's pretty nice. But when we do get above, if we do get above $18, I do think that is going to be a little bit precarious because there's a lot more room to fall. So do keep an eye out for topping signals. And I do also want to note that the high on March 5th was actually not $18, but it was $17.96. So something to keep in mind there. And then now, switching over to BOIL here, this one was actually pretty surprising, or perhaps not so surprising because it is 2x leveraged. But so moving up from the bottom here at a price of $13.45 to the high that was hit on March 5th, which was at a price of $19.77. We did get a pretty big pullback. We didn't just go past the 382 or the 50% retracement. We went all the way down to the 618 on Thursday, hitting a low on the day of $15.87, actually just being 1 penny above the 618 at a price of $15.86. We did close lower on Friday, actually closing below the 618. So that is unfortunate, but this could be a bottoming signal, as we did get this big red candle down on Thursday. It does look like it's starting to cool off with this inverted hammer candle, which is a reversal signal. So we might be seeing another attempt at these highs next week. And I also do want to note that we did close the week on March 8th at a price of $15.73, being down just about 1% on the day, but being down a whopping over 13% on Thursday. And so that is something to consider, how much more volatile BOIL is relative to UNG, which was down only about 7%, a little over 7% on Thursday. And so here, looking at this, if I do adjust this Fibonacci retracement to be the low from February 23rd, which is at a price of $14.61. All right, so now that I have that adjusted to the bottom there, we can look, and it actually looks like, BOIL did a retrace to the 786 almost perfectly, going just below it on Friday, hitting a low on the day of $15.69, which is just 2 pennies below 1571. So I am hoping that, we don't do a full retracement here to 1461. And I do hope that we are finding a bottom here before a continuation to the upside, ideally getting past the previous high of 1977, getting up to $20 a share, if not higher. And so if I do take a step back for BOIL, that previous high for it has not been hit. So I do think that is encouraging. There is still plenty of upside to go, whether that's for natural gas, BOIL, and potentially for UNG, as they all do seem to have had healthy pullbacks with levels still to the upside to reclaim. And so this low here was at a price of $23.83, hit on December 11th. And so if I do zoom in, go up to that high, that does represent, let's see, about a, I think, 50% move. Let's see, yeah, just about a 50% move up to that level. So quite a lot of potential here, but there's also quite a lot of risk with BOIL. So I would encourage caution with BOIL, as I have found it to be pretty volatile and risky. Whereas UNG, I think it's a little bit more predictable, but I do think it's also interesting that in ways that it does sometimes differ than the price action of natural gas, BOIL can be more similar in that those two have not hit this yellow line with the previous low, whereas UNG has. So I do think that sets this up to be a little bit more risky, but I do also think it sets all three tickers, natural gas, oil, and UNG, up for a lot of upside, potentially, like with UNG, going up to $20 a share. So what I'm planning on doing, and I guess I should say what I did do, is I did trim a lot of my position on March 6th, and I waited for a pullback to $16.70, which was, let's see if I do adjust this again, it is $16.70, which was the 382. I regret not considering adding a little bit more at the 50% level, but I just wanted to add back in what I had trimmed at the top, getting my average down, and could have added more at 16, but I didn't. Moving forward, I'm just going to be keeping an eye on this retracement and keeping an eye on the 786, which would be at a price of $15.72. Maybe that is going to be a good dip buying opportunity before rally higher, but also, I do want to be exercising caution in case we do break below 1511 or 1456. If there are new lows to be found, I want to be ready for them. But that is really just my take on natural gas for this week. I do think that we will see a lot of upside. So I did want to go over that and just kind of suggest that it does seem like this little pullback that we've seen could be temporary, and we could be moving to the upside, getting past $2.05, potentially getting up to right around $2.20. So that is what I'm going to be looking for this week for the upside. But, I'm also going to be keeping an eye on the downside, which for natural gas would be right around a price of $1.76. So do keep an eye out for that. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.